Hello, I'm Rhonda Porter. Today is Monday, October 7th, and I'm here with this week's mortgage market update. Last Friday, the BLS jobs report came in much hotter than expected, with reporting that 254,000 new jobs were created versus the 140,000 that were expected. Revisions to previous months, July and August, also added 72,000 additional jobs. And so the unemployment rate also fell to 4.1%. So all this caused mortgage rates to push higher as job growth is considered inflationary, which inflation is bad for bonds like mortgage-backed securities. So conforming mortgage rates are almost a quarter point higher than what I reported last week. And this is largely due to the jobs report on Friday. You can see how that they trended. The dark blue line is the conforming rate on this chart from Optimal Blue. But 6.25 is still a really good rate, especially if you look at just a few months back, we were in the upper sixes. But obviously, we would like this trend to be moving lower instead of higher. So please remember, this is an average. We don't know how rates are being priced, if people are paying points, what their credit scores are, or what their down payment is. All these things can factor what your mortgage interest rate may be. So if you'd like a rate for your personal scenario, please reach out to me. I'm happy to provide that for you. This week we have the Fed minutes from September 18th being released, and on Thursday we have what may impact mortgage rates the most with the CPI, or Consumer Price Index, which measures inflation. And the headline figure is expected to fall from 2.5% to 2.3%, and the CPI core figure is expected to come in slightly lower at 3.1%. So if this data comes in, again, hotter than expected, showing inflation, we will see mortgage rates rise. If it comes in as expected or better than expected, we'll see mortgage rates improve. But you're probably catching a trend here if you've been watching my reports at all, that inflation and mortgage rates don't get along. So we want to see inflation getting in check so that mortgage rates will improve. And it's just after 10 a.m. Seattle time as I prepare this for you. Mortgage-backed securities are currently down about 20 basis points. And check out those red candlesticks. Like, everything was going well with rates were improving with the green sticks. And then we get to Friday's jobs report and bam. So anyhow, you can see how much that has impacted rates. And we're still trending higher a little bit today. So hopefully we get some green candlesticks back in our charts again here soon. And for today's spotlight, I want to talk about VA loans. A VA loan is a benefit that our veterans earn from serving our country, and it's often better than a conforming mortgage with the interest rates. And a veteran does not have to have a down payment typically, and also there's no mortgage insurance if they don't have a down payment. There's also no loan limit, and it doesn't mean, one thing I really want to stress is that just because someone's opting or wants to use their VA loan benefits, it doesn't mean that a veteran doesn't have the funds for down payment or that their credit is challenged. It's just, this is actually a great mortgage that they deserve to use. So I hope that you will consider accepting a VA offer if you're a seller or if you're a listing agent. If you have any questions or want to learn more about VA loans, please reach out to me. I'm happy to answer your questions. I hope you have a great week. And if you or anybody you know are considering buying, selling, refinancing, remodeling, or need some debt reconstruction, please reach out to me. I'm happy to help you and review your scenario at no obligation to you. Take care, and I hope to talk to you soon. Bye-bye.